India at World Gold Council or WGC, now joining us. Mr. Jain, thank you so much for taking your time out and joining us here on ET Now. And after 5 straight months of inflows, May saw about $1.8 billion of outflows from global gold ETFs. What, in your opinion, led to this, and what triggered the reversal in the trend?
Thanks for the question. From an ETF flow perspective, we've seen a very buoyant inflows over the last year, particularly the second half of 2024 and the first few months of 2025. And just to give you reflections on numbers, last entire year, the net inflow was about $3.5 billion. And just in this first phase of 2025, we've seen an upward trajectory totaling about $17 billion of addition. And over that, there have been some encashing or booking of profits and stuff, which perhaps we're not surprised. It's a natural phenomenon. And of the inflows that have happened, compared that to the outflows that happened is a very, I think, a reasonable number. We're not sort of any startled with that number. So I wouldn't say that that's a reflection of any trend, so to say, but it's purely profit booking that certain organizations have done.
Okay, so that's as far as outflows in the month of May are concerned. But Mr. Jain, despite the May outflows 2025 for the calendar year this year so far, we have seen inflows of about $30 billion. Do you see this as a temporary correction or a start of a new trend as far as outflows from gold ETFs are concerned?
As I said just now, that I don't think that it's a new trend. The gold has delivered extremely well as an asset class performance. The interest in the financial community on gold has been at an all-time high, and we think that this encashing or profit booking that's happened is a natural phenomenon, and hence and the structured pillars on which gold is forecasted and is built upon are fairly strong and in favor of gold. And keeping those elements in mind, we think that how gold will perform, will deliver in the mid to long term will be strong, and hence I don't think there's a trigger to a new trend.
Jain, let's now shift focus from the outflows and inflows that we've seen over the last few years to the triggers and factors impacting global gold ETFs and gold prices in particular. The market expects higher interest rates by the end of this financial year. How is this impacting investor sentiment towards gold prices, and what does this mean for ETF inflows then?
Historical trends by which when the interest rate goes up, there's an impact on gold pricing and vice versa. But particularly over the last 24 months, now the historical sort of patterns have demonstrated linear footage, in the sense that what used to happen in the past is not necessarily happening right now. Having said that, what we believe is that with the trade sanctions, the trade impact on the US economy, there will be stagflation or inflation in the sense of the consumption will slow down, and that will have certainly a positive or a sort of correlated impact on gold. So we'll have to wait and watch. But what historically has happened, perhaps we'll have to wait and watch to see what really happens now in the current existing circumstances.
Also, can you tell us how has gold demand moved over the last few months, both in India as well as in the global market? And if you can split that demand for us into investment demand versus consumption demand, especially because of the kind of move that we've seen over the last 2 odd years, has investment demand for gold picked up pace?
Yeah, so last few months, I mean, if we've seen from January onwards, we've seen over 30 peaks of gold prices from the beginning of January till now. And keeping that in mind, the jewelry consumer that we've seen historically and the way they perform is that when the prices are going upwards or downwards, they wait and watch. And once there's stability, they come back. So we saw a very firm growth on pricing or rise in prices, which did not give an opportunity of a break. And hence we've seen consumers or a dip that we've seen in Q1 for jewelry. Q2, we believe, will be better from a jewelry perspective because the prices are slightly more stable as we talk right now. And we will see the results as they come out. So first quarter, there was a very significant drop, and towards Q2 for jewelry, we think it's going to be safe. Now let's talk about investment demand, where from a Q1 perspective, we saw growth, and we think that the interest continues to be very high. And overall in the year, if you look at it, our projection would be that there should be a single to maybe very small double-digit drop of jewelry globally. Vis-a-vis from an investment perspective, it should be strong.
Mr. Jain, also wanted your thoughts on where do you see gold prices headed from here on? Geopolitical turmoil continues. We are seeing some new headlines every single day. In this backdrop, given this backdrop, where do you see gold prices headed from here on?
Well, we at Global Council do not, comment on the price, but we can always certainly comment on the pillars on which pricing is constructed upon, and the elements that stand out, are the central bank buying, and that's to do with geopolitics, with de-dollarization, all the conversations of developing economies becoming more relevant, and those stay strong. Secondly, the investment demand on the financial side has drawn on a lot of interest. We've also seen the technological demand of gold being, growing steadily. And the last that we think is perhaps going to be dipping, as I mentioned before, is going to be jewelry. Now, keeping the rationale of gold and the pillars on which gold pricing is based on, they all seem to be a lot in the favor of gold from a mid to long term perspective.
Okay, so that's as far as gold prices are concerned. And since you spoke about central bank buying, that was exactly my next question. Central bank bought about 1,000 tons for the third year in a row. That's the quantum of gold they bought in the calendar year 2024. How do you expect this trend to shape up in this calendar year and for the years to come?
Well, central banks, have been buying not necessarily because of any short-term event, but we've seen this trend over the last few years. We at Global Council run a survey with the central banks, and our current survey will be out in the public domain next week. And even over the last couple of years, the trend in which few questions that we asked the central banks. One essentially being that will gold play a very important role in 5 years' time, 8 years' time? So the long-term indications of what central banks have talked about is again in favor of the increased exposure and investments in gold. Now, what will happen in this year? Now, the results aren't out yet, but the geopolitics indicate a certain indication of the continued buying, and of course, last couple of months have been a very slow buying. But we will wait, and I would encourage you to please wait for the results that come out of the central bank survey that should be out in the public domain end of next week.
Mr. Jain, thank you so much for taking your time out and joining us here on ET Now and helping us understand what outflows and the quantum of outflows in gold ETFs that we have seen in the month of May. But shifting focus from gold to steel now and on to an ET Now exclusive where the government is likely to